Today, bankrupt crypto hedge fund Three Arrows Capital demands more than $1 billion from Terraform Labs. Coinbase urges the S.E.C. to redo a rules change that would bring DeFi under the agency's jurisdiction. And we take a deep dive into Halborn's new report on the top 100 DeFi hacks, which reveals more than $7 billion in total losses between 2016 and 2023. Crypto markets were in the red this morning as Bitcoin continued to oscillate around the $60,000 level. By noon Eastern, Bitcoin was lower by 1.2% at about $59,400, but climbed to around $61,000 about an hour later as the producer price index, the first of two key inflation reports expected this week, came in cooler than expected. Also as of noon, Ether inched lower by more than 1%, but still traded above $2,600, and Solana slipped 1% to $146. However, an hour later, Ether rose to the $2,700 level, and Solana jumped to $149. Okay, let's talk about the top stories. Collapsed crypto hedge fund Three Arrows Capital is making a $1 billion claim against Terraform Labs. In a filing in Delaware bankruptcy court, the liquidators for 3AC claimed that the creator behind Terra USD and Luna, quote, engaged in a scheme to manipulate the open market for Luna and UST, which inflated the price and induced Three Arrows to buy the assets. The liquidators also claim that the collapse of 3AC is directly attributable to the fraud perpetrated by Terraform Labs. Just a quick reminder that in June, Terraform Labs and its co-founder, Do Kwon, agreed to pay $4.5 billion to the S.E.C. after a jury found the organization liable for fraud. Now, all told, Three Arrows liquidators are seeking more than $1.3 billion from Terraform Labs. Next, Coinbase is calling on the S.E.C. to rethink a rule that brings DeFi into the agency's regulatory purview. In March, the S.E.C. adopted a revision to the Securities Exchange Act of 1934. In that update, the definition of an exchange was expanded to include more kinds of assets and institutions, decentralized finance being one of them. Amid growing outcry to that rule, the S.E.C. reopened its comment period on the proposal, and in a letter to the agency submitted on Monday, Coinbase said it's concerned about the expanded definition of exchange. The crypto company said the S.E.C. irrationally assumes that compliance is possible for decentralized exchanges, and said that the agency needs to re-propose the rule and decline to extend the guidelines to decentralized exchanges, also known as DEXs. In a statement shared with us, an S.E.C. spokesperson said the agency, quote, benefits from robust engagement from the public and will review all comments submitted during the open comment period. The S.E.C. added it generally responds to comments received as part of the final rulemaking and not beforehand. And finally, speaking of the S.E.C., the agency just filed fraud charges against an alleged crypto marketing scheme. In a Monday press release, the S.E.C. alleged that Novatech and its principals operated as a multi-level marketing scheme to defraud more than 200,000 investors around the world. The S.E.C. claims Novatech was able to rake in more than $650 million by promising to invest the funds in crypto and foreign markets. At the same time, the S.E.C. filed charges against top promoters of the platform, claiming they were paid large sums of money to promote Novatech and continued to do so even after regulators made them aware of multiple red flags. One of those promoters, Martin Zizi, agreed to settle the S.E.C.'s charges by paying a $100,000 civil penalty, pending court approval. All right, for our main story, yesterday, Halborn released its report on the top 100 DeFi hacks between 2016 and 2023, which reveals more than $7 billion in total losses in that time frame. Crypto World's Talia Kaplan spoke with the report's author, Gimenez, and Halborn's VP of Enterprise Security, Piotr, Cielas, about the report's key findings and the trends that were uncovered.
I went through your new report on the top DeFi hacks, and I want to point out some of the key findings. In the 6-year time span between 2016 and 2023, a total of $7.35 billion was lost to these hacks, with the $624 million exploit of the Ronin network back in 2022 accounting for the largest hack in that time frame. Some of the common exploits you found include direct contract exploitation, which accounted for 33% of hacks, followed by both compromised private keys and price manipulation at 27%. Mar, you're the author of this report, so I want to start off by asking you, what jumped out at you while you were putting this data together? What would you say was the main takeaway of your research?
I think the main takeaway is that even though it seems like we have improved security, but not with auditing a smart contract, there is still a huge percentage of hacks that are on not audited protocol, and that we need to do like a holistic and complete audit of the protocol, taking into account those off-chain vectors like a compromised private key and other kind of off-chain attacks.
Now, another interesting note from your report, the number of attacks peaked in 2021 with 38% of the top 100 hacks taking place that year. The trend showed a slight drop in the number of attacks within the next 2 years, but the numbers were still significant and a lot higher than the years 2016 through 2020. The amount of money lost per year was also a lot higher in the year 2021 through 2023, with losses peaking in 2022, which your report says highlights the increasing scale of DeFi and the high stakes involved. Piotr, what do you attribute the growing trend of DeFi hacks to? And why do you think we saw a drop in both the number of attacks and the amount of money lost last year?
I think there are multiple facets to this. We've seen an explosive growth of DeFi as a new paradigm in both finance and technology. Since 2020, throughout 2021, 2022. Which also coincided with, very high profile, collapses of both decentralized and centralized companies, which, naturally brought down the value of, cryptocurrencies in general. And so, while the numbers, they may, show lower values, still the number of hacks and the structure of them, that still remains quite concerning. And so this is both economic reasons for the drop in value, but for the increased activity, that's increased adoption and popularity of DeFi within blockchain and power users.
I also wanted to add that even though we saw a trend of a lower number of attacks and a lower value lost on 2023, it could also be related to the fact that there was kind of a crypto winter last year. And so far, in the 8 months we have this year, if we check, for example, the top 10 leaderboard hacks, we already have 4 that are, 3 that are from 2024 and are higher in value lost than 2023. It also coincides that the total value lost on the DeFi protocol have been increasing, although it's still not at the level of 2022. So we might see an increase on number of hacks and value lost this year. We don't know. It's difficult to predict.
Now, I want to turn to the most targeted chains. Your research found that Ethereum led in both the number of attacks and total value lost, accounting for nearly 50%, followed by Binance Smart Chain with 16% and Polygon with nearly 8%. Piotr, why do you think Ethereum was the most targeted? Is it because most decentralized applications are built on the specific chain?
That's largely true. Yes. Oftentimes, the Ethereum and its extended ecosystem is the first step in most people's DeFi and smart contract and cryptocurrency journey. Binance Smart Chain and Polygon, they share some similarities, to some, a large extent with Ethereum. And so, they are considered a part of the Ethereum ecosystem. And so, it's quite easy to port a concept, a project, and attack vector to from one ecosystem to another just because how similar they are.
Now, the report notes that DeFi protocols face diverse vulnerabilities, with input validation flaws and logic errors being the most common. The report also points out that while proof verification errors are less common, they also lead to significant losses. Now, the report also offers some ways that these risks can be mitigated to protect against substantial financial damage. Those include auditing and validation processes. So, Piotr, Can you take us through some of the ways the risk of hacks can be reduced?
The first and foremost thing we should remember is that security is not a product, it's a process, and more practically it's a journey. So you set off as early as you can on the journey while you start conceptualizing your product, your service. Just how close you are to the actual user funds or the treasury of your organization. You need to involve security in every step of your, product or service lifecycle. And so, if you solution for some of the threats, attacks, before they happen, or before someone points them out to you, either an internal or external security services provider, you'll be better prepared for your a beta launch, for your mainnet launch, and for obviously increase the user base, because when you grow too big, oftentimes it's unfortunately too late to fix some foundational issues.
We'll be back again tomorrow, and we'll see you then.